Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. When we first profiled our today's top high-yield dividend stock in April, Global Partners LP traded on New York Stock Exchange under symbol GLP. Oil was trading around $70 per barrel, down from March 22 highs of around $130 per barrel. The midstream company was trading at $30 and paid a quarterly dividend of 63.5 cents per unit. It also paid one-time special distribution of around 93.75 cents per common unit, but the base dividend was around 63.5 cents per unit. Fast forward 4 months and Global Partner stock has rallied about 9% and its dividend is up 7% year over year. And it's now paying base dividend of 67.5 cents per common unit. Why the bullishness, you might ask? Global Partners has been reporting strong earnings and distributable cash flow. Moreover, crude oil prices have rallied to about $85 per barrel, and analysts have said that $100 per barrel is possible this year. So, John, what can you tell us about Global Partners LP?
Thanks, Mo. Global Partners LP, as you mentioned, is a midstream oil and gas limited partnership that manages a diverse portfolio of businesses. It's actually one of the largest independent owners, suppliers, and operators of gas stations and convenience stores in the Northeast U.S. The partnership also owns, controls, or has access to one of the largest terminal networks in New England and New York. According to the most recent data, the company's infrastructure includes 10 million barrels of storage capacity, about 1,700 owned, leased, or supplied gas stations in 12 states, 343 company-operated convenience stores, and 24 bulk petroleum product terminals. The company sells about 357,000 barrels of products each day. This includes topping up 865,000 automobile tanks, 26,000 diesel truck tanks, and in the winter, the company heats around 30,000 homes daily. Global, over the last number of months or quarters, has also announced a couple of significant investments. This includes a recently announced joint venture agreement with oil giant ExxonMobil to acquire 64 Houston area convenience and fueling facilities. It also recently signed an agreement with Gulf Oil LP to acquire 5 of Gulf's Northeast refined product terminals for about $273 million in cash. And the terminals have an aggregate storage capacity of around 3.9 million barrels of oil.
And how is this company doing financially?
Global reported strong 22 financial results. That momentum is carried into 2023. In early August, it delivered, in management's words, solid second quarter results with its wholesale and gasoline distribution and stations operations actually exceeding expectations. I'll give you just a few numbers. Net income was $41.4 million or $1.05 per unit. EBITDA was $90.7 million. Adjusted EBITDA was $91.6 million. And the all-important distributable cash flow was $54.8 million. On the other hand, gross profits were down just slightly at $242.7 million. And now looking ahead, management said it has a healthy and well-capitalized balance sheet that positions it for, solid long-term growth. Industry tailwinds are also on the company side. Gas prices are on the rise despite high oil production, with the average price of gasoline around $3.85 per gallon, and that's up nearly 30 cents or 8.5% from a month ago. And prices are expected to remain high.
And John, what can you tell us about dividends here?
It's been raising its dividends actually fairly regularly, which should be good for income hogs. Since the second quarter of 2020, it has increased its distribution 11 times. As mentioned earlier, in February, it paid a cash distribution of $1.57 per unit. The payout consisted of a quarterly distribution or base distribution of around 63 cents per unit and a one-time special distribution of 93 cents per common unit. Most recently, this past July, Global declared a quarterly distribution of 0.675 per unit or $2.70 on an annual basis for a pretty big yield of 8.41%. The 0.675 per unit distribution represents an 11.5% increase over the same period last year and 3% gain over the previous quarter.
And how are the Global Partners unit doing?
well. Like the rest of the company, in addition to consistent dividend growth, a Global Partners stock remains bullish since April 2020, which is when the pandemic fuel sell-off bottom. Global Partners stock, with dividends reinvested, of course, has provided returns of 441% over the same time frame. The S&P has returned just 69%. More recently, that is, since we last profiled Global Partners in April, the company's units have been trending higher. On August 1st, they hit an intraday high of 33.65 per unit. That's their highest trading level since March. That also represents a 9% gain over our April profile price. And the outlook remains solid too, with Wall Street analysts providing a 12-month median price target of $40 per unit.
All right, John, thank you so much for your analysis. Energy stocks in general have been doing well of late and are expected to one of the biggest winners this year and next. Global Partners LP, traded on New York Stock Exchange under symbol GLP, is no exception. The high yield dividend paying company has been reporting strong earnings and cash flow growth. And thanks to its growing diverse network, its outlook for the rest of 2023 is excellent. This should help GLP stock provide oversized share price gains and ultra high dividend. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.